So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips, rocking and rolling here, 26th of January 2025. No trade calls, no recommendations, or responsible own stuff here for educational purpose only. So, welcome to one of these Substack videos. Apparently, the Palantir one last time, a lot of people liked that, so I thought I'd do another one of these instead of the usual weekly outlook video. So let's see what gives. So basically, today we're looking at the DXY. I'm not going to start discussing Trump, tariffs, yada, yada, yada. I'm just going to purely try and look at this technically, right? So here, the way we're focusing on this is that the dollar's being stuck basically inside this broad chop zone, right, which we called this range, right, which was 106 to the upside, 103 mid, and 100 to the downside. And we said we'd likely needed to see some kind of catalyst to break outside of the zone, or as far as we're concerned, this is just a range trade, right? And we're more than happy to trade failures at the extreme to the upside, failures at the bottom end of the range, or breakouts of the range. And basically since 2023, we just had a lot of range trade, right? Nice trading the extremes for those who like to trade the midpoint, also fairly technical reactions at midpoint, okay? And what's happened here is basically after that attempt to hold a series of lower highs, and this, for this to be confirmed, what you would have liked to see was that this move, even if it bounced at the bottom of the range, you would have liked it to see into the 103, which is kind of like the 50 back of that move, and then get sold to finally continue to break out of this range. But instead, what happened? Bam, low, and still stayed in the straight range. And now what we've got is a range breakout, right? So as far as we're in that range, the way we look at this is low end of the range, top end of the range, and the midpoint, right? 103 is mid. Now what happens as soon as we get a range break, and what we mean by the range break is that breakout here, right? With move ups, daily closes, weekly closes above the 106. As far as we're concerned, the range has shifted. It's a range shift. So if this was the original range with the high, the mid, and the low, we've got a range shift, and the range gets pushed up. So mid becomes low, high range becomes mid. That's why the arrows have the circle around them, and then the 109 becomes top end of the range or high end of the range. And that's where we are, right? The market is attempting this range break higher, and as long as it can hold this range break higher, right, we've got much higher targets, which are around that 114. Now, at what point, because a lot of people are looking for some kind of a top in the dollar here following the 2016 analog when Trump got elected and the market just tried to come up. At what point do we consider that this range shift has failed, right? And we're going back into the original trade. So there's two important things to keep in mind. First thing is, should we come back down and, get comfortable below the 106, it doesn't, and even back below this trend line, it doesn't mean that this is going to crumble and die, right? The only thing that means that it's probably failed the range break and it goes back into the original range, right? This only really gets uber bearish if we trade back below the 100, right? Above the 106, it's trying those range shifts to the upside, and it needs to be back below the 100 to try range shifts and acceleration to the downside. Remember that overridingly, the theme is that this is still a chop range, and it should be traded as a range as long as we're stuck inside that area, okay? Now, to the downside, what I'd be focusing on is understand that this could easily come back into midpoint now, the 106, and hold that upside rotation. Now, what is also interesting here is you put a fib here from the move from the lows to highs. What do you see? You see that basically A to B, the 50 back of this level, is coming in at that 106 and at this descending trend line. So basically here you've got a zone which is going to be critical on any pullback, right? And so the way we're looking at this now is this is still bullish. Any pullback back here is a corrective, and as long as this holds, it's a corrective move to try and continue the upside. If we get back below inside this zone and we can't hold the 50 back, we can't hold that 106, then once again, this becomes neutral inside this 106, 103, 100. And should we break below, then that opens up range extensions to the downside and a move back, towards 94s, 95s. Okay. So that's pretty much the way we're looking at it. Let me know if these videos are interesting. Again, the usual, I'm not sure the usual weekly, the week ahead video I was putting out is that interesting, because a lot of people are putting stuff like that out. So I thought maybe it's more interesting if we just focus on these technical videos that just take one chart at a time and try and talk through it, irrespective of what the trade is, just to give you a way of how we look at things and how we frame levels, ranges, breakouts, and action in general. Okay. So again, thank you very much. Have an awesome one. All the best, guys. Take care. Bye-bye.